Good morning, people. How we doing today? What day is it? It's Tuesday, May 21st. I hope you're all doing well. We are coming into a period of very low volume, low volatility as next week we've got, oh geez, excuse me, I couldn't avoid that. Next week we have a short week, right? It's Memorial Day. And a lot of the volume is out of the market already. We're starting to see decreases in volume substantially as news rolls out. Today we have six Fed speakers, which is a lot, right? There's a plethora of Fed speakers that aren't necessarily holding out very big importance per se, right? The folder, if you look at Forex Factory, for example, like they denote the importance by folder color. They're like yellow and orange pretty much. So I'm not looking at this as too much of a market moving situation, but we have Feds Barkin, Feds Waller, Feds Williams, and Feds Bostic that are pretty much all starting now, right? They're around now at some point. And then we have Feds Bar and then Bostic again later on. So six Fed speakers today is something pretty wild. Not again expecting to have massive, drastic market moves, but as we can see, we most recently got like a little spike right now, actually, based on some of these Fed speakers. So when we look at this, there is a lot of news that comes out tomorrow as well. You've got the FOMC meeting minutes, you've got VIX expiration, which is a big one, and then you've got NVIDIA earnings after bell, which is another big one. So a lot of news to kind of increase the volumes for maybe tomorrow, but realistically today and the remainder of the week outside of maybe tomorrow, I'm expecting just extremely low volumes in these markets, low movement, and just general chop sideways to slightly upside momentum before the volume comes in. Realistically, going into a shorter week next week, I don't think that markets are going to want to allow for too much of the downside to really open up. So what we've seen in the most recent movement, right? We've seen that gold, silver, copper based, bronze, all these precious metals have been ripping higher, right? New highs continuing to be launched in the latest games, and there is skepticism about the results and the possibilities of some kind of potential rigged movement, if you will. However, those that are betting on which metal might be awarded next, there's plenty to consider for all the different precious metals. Right, when we look at gold hit levels of over 2450. Right, we can look at these gold futures, for example. Um, Gold futures, even on this dip, just ran back into these highs. Despite a strong American economy and a US dollar, analysts have also pointed out to the Fed pivot on interest rates, as well as geopolitical tensions that have increased the demand for the safe haven. Not only are investors getting involved, but there is a large amount of buying from central banks, while the retail crowd is getting on the action with gold bars from Costco. Right, we've seen a lot of money going into gold per se. So we've also seen silver, right? You can take a look at the futures, which is SI. I like SLV. I've been holding SLV for quite some time now. But the metal has outperformed gold in the most recent weeks, right, bringing its total gain to about 32% year to date compared to gold's 18% return. It also benefits from safe haven attributes such as its shiny cousin, right, such as a popular hedge against inflation is a big one, along with some distinctive practical qualities of its own. Silver is used for industrial purposes like solar panel cells and is relatively cheap in ounces when we compare it to gold naturally. So it's hovering around like $32 here, while gold is around like, I can't even remember, what was it at? On the futures around 2400, 2430 right now. So we've also seen copper, right? I think it's CU if I'm not mistaken. That's not the right one. No, 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 no. What were copper futures? No, no, no. I guess we'll look at the CFD here. So the latest rip has made numerous headlines after hitting a new all-time high on exchanges across the board, right? Fear of supply shortages as well, and trade disputes have helped generate buzz around the industrial bellwether, which is also a key for green transitioning and rising electrification needs. Copper is used for a lot of EVs, wind turbines, power transmissions, and AI data centers, meaning that there are actual supply and demand fundamentals to assess when evaluating the worth of the red metal. We've also seen like FCX is one of the ones I like. That's fairly copper based. Has been doing extremely well. Been holding some leaps on this for quite some time now. Tech, right? Tech is another one that we've noted that's been doing extremely well here. It's up a significant amount right after buying those leaps. It's up around like almost 50%. So the options have fared a lot better realistically. When we look at commodities, right, the commodity competition can experience chaotic events with scandals and manipulation hitting items like nickel and cocoa in the recent years. There's speculation that this might be going on this time around as well, triggered by leverage contract buying, short squeezes, momentums, or price premiums on different exchanges. So I think that when it comes to commodities in general, what's it called? When it comes to commodities in general, there's like miners and commodities I think have bottomed out, which is one of the things that I was talking about yesterday about oil, where I think that this pullback in oil is going to be the higher low that presents another opportunity that allows us to swing to the upside. So I've been liking precious metals a lot, right? And one that like a basket, like an ETF basket with all these precious metals, GLTR, that I've liked. I've been holding this on the long term along with the other assets as more on the derivative side for the other assets, right? I just have leaps on a lot of them, mainly SLV. I wasn't able to get on the gold train, but I still like this along with oil for that potential momentum move to the upside with the continuation in this cycle for commodities in general. So some people are looking at softs as well, the agricultural aspect, which has some pretty good potential on that side too. Now, in terms of some of the other news right outside of precious metals, which are being used as inflation hedges and commodities in general, which I do like all of these for the long side for the past few months or so, we're also seeing some news out of JP Morgan, right? So succession plans are well underway. Yesterday we got a very significant downside move in JP Morgan at the peak. We're down about 5% for it a bit here, or well, nearly 5 we can say. As succession plans are well on their way, right? Jamie Dimon saying it's up to the board to determine how much longer he'll remain CEO, and I think that when I can't put the jersey on and give it my full effort, I should leave. He announced at the bank's investor day, adding that the timetable is not 5 years anymore. Dimon also outlined that that the lender will not repurchase a lot of stock at current prices, noting that such a buyback at a valuation 2.3 times the tangible book value would be a mistake. And following that, right, JP Morgan shares slipped a decent bit, right, down 4.5% on those comments, but they're still up 40% over the past year, which is a fairly good outcome realistically in these things. So when we're looking at this, we've seen a significant pull down. It's been doing very, very well here. We'll see what Jamie Dimon does, but JP Morgan with Marko Kolanovic as well, the derivatives expert, quote unquote, talking about the next moves is interesting. So one of Wall Street's most prominent bears has finally turned positive on his outlook for the stock market indexes to continue to hit record highs. Mike Wilson, who is an equity strategist at Morgan Stanley, now calls for the S&P to rise to 5,400, higher than his previous year end of target, which was 4,500. Now, we're not very far from that 5,400, right? I think that he's very late on the trend here and on the trade in itself. I think the reality of these situations, a lot of these bears starting to turn bullish, presents a capitulation to the upside that'll allow us for a swing lower to maybe potentially press back to the upside to accumulate better buyers. So his expectations were the lowest on the street. The forecast is derived from a 19 PE multiple and 12-month forward EPS based on the June 2026 $283. So this earnings path is based on our economist's growth forecast output for our earnings models and our view that AI diffusion will boost margins starting in 2025. This is what Wilson declared. So his target is not out of reach. I think we surpass that significantly after we see more of a pull down in these markets and refresh realistically. So As we take a look at these markets right now, we've pulled down into that 24 area fairly well. Some news, I'm assuming some Fed speakers yapped a bit here, but as it stands, we're still holding this upside momentum fairly well. What we've been doing is accepting into distributions continuously higher and higher, and what that's prompted has been just, I guess, more exhausted buy side, but no real sellers that are coming into these markets. As it stands, like yesterday, the S&P 500, if we can't make a move under 53.24, then the logical step is going to be continue to look for some of this upside, targeting 53.36 and maybe even new all-time highs. But should we get an offer below that 53.24, which looks a bit shaky right now, we can see a little more of a momentum push to the downside. It's very similar with the NASDAQ at that 710 area. So we've got a very clear defined pivot that will allow us to see some kind of this momentum to the upside swing realistically. And if we start breaking below these areas, then so be it, right? There's going to be more downside in these markets. But right now, as it stands, 53.24, that's a massive all right, that's a massive pivot area for me on the day session. I'm expecting low volume right now. We're trading at 118,000, 119,000 contracts pre-market here on the S&P 500. Lower volume, lower movement, sideways action. Not expecting too much crazy volatility to come on today's session as we get ready more so for tomorrow and the longer weekend. So we'll wrap it up from there. We'll chat soon and enjoy the rest of the day. So I'm leaning a bit more sideways to the bull side today, and then we'll go from there, see how that kind of transpires with a key pivot in mind. And we'll see you guys in our live trading room that we're going to open right now, and check out community.tradeproacademy.com. All right.